Let me briefly give you a 1-minute update from the crypto market, because Ethereum this week had an absolutely skyrocketing surge. So the reason for this was obviously because the Securities and Exchange Commission is about to approve spot ETF for Ethereum. The chances for approval now exceed more than 75%. Because of this, on Monday alone, Ethereum skyrocketed 19.2%, which is the 26th highest percentage growth in a single day, and in terms of dollar amount, this is a #1 growth of Ethereum in its whole history. At the same time, as you can see from this next graph, Ethereum completely obliterated its 50 days moving average, so if you are a technical analysis trader, as long as you believe in it, obviously, this must be a very good sign for you. Next picture also shows us that the interest in futures for Ethereum also pretty much started to skyrocket. And then, according to some other analysts and the crypto experts, Ethereum price per coin might reach and even exceed 6,600 for every single Ethereum by the end of this year. As a result of this, as you can see from this next picture, the sentiment on crypto markets, specifically in Ethereum part of it, is now maximum since September of last year. And at the same time, a lot of small wallets and small retail investors, they started to purchase Ethereum into their crypto wallets. And this is still not yet the very same case from institutional investors, because usually they take some time. It is not like that you just spend $10 million buying Ethereum for them. Obviously, you need to present a document, you need to do a research for your senior management, and they will be deciding whether to purchase it or not. But nevertheless, just the entire crypto market is going through very good times right now. For example, speaking about Bitcoin, previously there was an inflow of $305 million in a single day, which is the 7th day in a row of Bitcoin ETFs inflows. And the Bitcoin trading volumes also reached their absolutely highest numbers of 46.2%. But at the same time, a little bit of negativity is that a lot of actual Bitcoin holders, exactly, they prefer to hold their Bitcoins instead of using them for transactions, which is technically against the idea of Bitcoin, because it is supposedly needs to be a currency, cryptocurrency. So whenever you just hold it, pretty much destroys the entire purpose of it. And ultimately, here is the Fear and Greed index both from the stock and crypto market. On the stock market, we are right now in the small greed zone, 62 out of 100, and crypto market is 76 out of 100, which is a pretty big increase from last week alone, which was in the low 60s. It is now time to talk about some serious stuff, and potentially a little bit scary for some of you, because some analysts and Wall Street smart money, they predict that the situation with the catastrophic situation with the US debt might collapse within the next 5 years. Guys, before we proceed, if you don't mind, please like this video and subscribe to my channel, helps a lot with my work. For this, thank you so much. And so yeah, to open this chapter, I would like to mention that Goldman Sachs, you all know about this company, right? They predict that by the end of 2034, the total debt to the total GDP of the United States will exceed 130%, which is a significant boost from their previous prediction of just 97%. But just think about it. US debt will be 1/3 higher, bigger than the entire US GDP. Literally, if you think about it like this, of course this is just a theoretical scenario, but if you take your entire gross domestic product just to pay for your debt, you still be left with 30% to pay, but you will have zero GDP. This is how crazy the situation is. Already right now, at the moment of recording video, just the debt maintenance, just interest payments for debt, they exceed already $1 trillion, which represents 12% of the entire American budget. Yes, just in debt interest payments alone. So unless something is drastically to change, America is like literally right now kicking a can down the road, hoping that somebody somewhere in the future will find a solution to this existing problem. But they're gonna wake up tomorrow, they're gonna wake up next week, they're gonna wake up next month, And most likely they're still gonna be hoping that somebody somewhere in the future will solve this problem. Right now it is not our concern. Well, eventually the bill will be due and the payment has to be made. And ultimately, during one of the most recent FOMC meetings, they proposed a pretty radical pivot into the entire economy. Because yes, the situation right now is extremely unstable, the Federal Reserve is barely balancing the interest rates and the inflation, which is, as you can see, is no longer budging recently. So they came up with some very harsh statements. Specifically, what they did mention is that, yes, once again, the inflation is not budging. The fight against inflation itself is taking way longer than even the most conservative estimations. We are still seeing the inflation, which is almost twice higher than the target of 2%. For this reason, the decisions whether to increase or decrease interest rates are way too early to tell what they're gonna do. But a lot of representatives, they do consider that strengthening, that hardening monetary policy, that making the economy more hawkish, let's call it like this, most likely it will be necessary despite the fact that whatever is happening within the economy itself, because the priority is safe to save the economy. Simply, if you do not sacrifice some parts of it, you are risking of losing it all. And while a lot of people might claim, well, take a look at the S&P 500, take a look at the stock market. Right now we are breaking the all-time highs of the S&P 500, Dow Jones Industrial Average. Yes, this is true, these are facts, I'm not saying this is not. But since 2011, one of the biggest, if not the biggest factor which was moving the stock market upwards, which were companies doing buybacks. Whenever companies are doing buybacks, the number of shares in the open market, they reduce it, which basically means involuntarily it increases the demand for the very same number of shares. This is the very basic understanding how buybacks increase the share prices, and also don't forget about the Magnificent Seven. If you take away these trillion-dollar companies, Apple, Microsoft, Google and so on, in fact, the S&P 500 will be losing its value right now. So, as you can see, the stock market is not doing as great as some people see. And to be honest, it is quite understandable why media is focusing on everything that is going good right now, because yeah, if you start just presenting apocalyptic, devastating headlines in the media, in CNN, Bloomberg, Yahoo Finance, well, this can most certainly cause a panic, uncertainty, doubt, and this can actually initiate a much bigger crisis. So they have to stay as long as possible to stay optimistic, but well, once again, unless something changes, we are guys facing, unfortunately, some tough financial future. Thank you so much for watching, please subscribe to my channel if anything of this was informative, and see you tomorrow.